Welcome to the Allan Small Financial Show. As always, I want to thank all of you for taking the time out of your busy day, spend some time with us. We have an amazing show for you today. It's a special edition of the Allan Small Financial Show. We have two great interviews, something we've never had on the Allan Small Financial Show previously. Two great interviews with some really important figures here in our province, in our country. And we're going to bring you those interviews to you this afternoon. We also have our top three list of things that we want to touch on as well. Let's put up our list for our show this afternoon. There you have it. Top three things to consider over the next 5 to 10 business days. As always, these are three things that I think individual investors need to be focusing on before you make your investment decisions. Our first interview, Ontario's focus on moving into 2026, an interview with Ontario Premier Doug Ford. I had the pleasure of catching up with the Premier this past week. He was telling me all about what he anticipates for 2026. Talked a bit about what happened last year, a bit about taxes and interest rates and everything. We touched on why he's optimistic about 2026. So we're going to bring that interview with him this afternoon on our show. Our second interview is with a gentleman that has been on our show before, David Patterson, I should say. He's been on our show talking about the trade relationship between the United States and Canada. He is Ontario's representative in Washington, D.C., and he's going to talk to us, or he will talk to us, spoke to me about everything that's going on. You know, we hear a lot about this idea that the United States isn't paying attention to Canada, not even negotiating or thinking about USMCA. Well, after talking to David, we know that is definitely not the case. So two great interviews. And as always, we're going to take at least one question. We should have time to take one question from our audience about anything. So if you have any questions regarding our interviews, regarding our top three list of things to consider before you make your investment decisions, please put it in the chat boxes. My team will pick up those questions and hopefully I can answer them for you at the end of the show. And if not on this show, we will answer them on our next show. So without further ado, let's move on with our All Ontario, Pro Ontario, Make Ontario Great Again show. So before we get into our fantastic interviews this afternoon and for this show, thought we would touch on our usual, our very popular segment, our top three things to consider before you make your investment decisions. And you can see the list up right now: geopolitics, upswing, and the markets. You can't help but to be caught up in all this geopolitical rhetoric, whether it's about Greenland, whether it's about Iran, Venezuela, the talk, even the simple talk about the Fed and the head of the Fed being, before, I guess, perhaps a jury to explain all the different things and the construction that's going on at the Fed right now. A lot of things going on between the Trump administration and various parts of the world and within the United States themselves. So we talk about geopolitics and how that is affecting the market. Earnings season gets underway. It's been underway now probably for about a week and a half, and started with the big U.S. banks, moved to some of the more smaller banks, some of the regional banks, super regionals. Bank earnings have come in quite nicely. Now we're moving more into tech. We got our first big cap tech name just last night report earnings. That was Netflix. We're going to talk about earnings season. And our third topic, investors seemingly tired of tech stocks. Just seems like no matter what news we get, whether it's Taiwan Semiconductor, the largest chip producer or chip maker in the world, they produce chips for companies like NVIDIA and Apple. When they reported great earnings, market really didn't move too well. When we hear good things out of NVIDIA, market doesn't move an awful lot. Are we starting to get tired of the tech stocks and that sector? So we're going to touch on that as well. So let's move forward with our first topic, geopolitics, upswing in the markets. And we've been getting a lot of questions, obviously, about geopolitical events that have been in the headlines over the last, let's call it, month or so. We've heard, I guess, initially about Venezuela, and then the removal of their leader, and the United States running Venezuela, at least for the time being, until government is put in place. We also heard about tariffs being put on any country doing business in Iran. We heard about all the instability going on in Iran. And most recently, I've been receiving a bunch of questions from investors about the whole Greenland situation, the idea that the United States is wanting to own Greenland, wanting to purchase or take over Greenland. And I think that the worry has been that if Greenland does not want to be bought, would the United States take over Greenland by force? And I've said to many investors already that I highly doubt that the United States would attack another NATO country. NATO is the United States is responsible for the majority of the money spent on NATO to protect the world's countries that are a part of NATO. And I highly doubt that you would see the United States attack Denmark or European countries with respect to wanting Greenland. But I guess that was what the market was nervous about. We heard the president today in his speech in Switzerland, Davos, Switzerland. He mentioned that no, he's not going to attack Greenland by any means. You know, he wants to negotiate. He wants to acquire Greenland. And if I guess the Europeans do not allow him to do that, then he would be quite unhappy. And what does that mean? Well, we're not exactly sure. But heading into 2026, there was a survey done. We can pull up our first chart. And you could clearly see by our first chart that geopolitical or geoeconomic confrontation was the number one risk heading into 2026. You talk about geopolitics in general, you have geoeconomical confrontation, 18%, state-based armed conflict, 14%. So geopolitical worries make up 32% of the people surveyed. This was done, nearly a fifth of the respondents in the World Economic Forum's Global Risk Report cite geoeconomic confrontation as the biggest immediate risk in 2026. And you can see all the others a lot lower than those first two. Weather events, societal polarization, economic downturn, adverse outcomes of AI technologies, et cetera, et cetera. So geopolitics has been on the mind of many. And I have to say that a lot of the geopolitical volatility is definitely coming out of the Trump administration or out of the United States. It seems as though President Trump has had a lot of goings on, to say the least, a lot of issue with the likes of Venezuela and Iran, and talked about perhaps going in and doing something with Cuba and Colombia and other countries like they did with Venezuela. Talked about Iran and the instability there and the uprising in Iran, trying to protect a lot of those protesters, as we've seen some of the horrific pictures as to what has been going on there. And now Greenland and their aspirations, the United States aspirations of taking over Greenland, and not to mention a lot of other commentary that the president has made about countries like Canada and France. So geopolitics has been on the minds of investors, and I think it should be on the minds of all of you as well. The geopolitical headline can do a lot to move markets. But for those of you that have reached out to me and said, you know, I'm really nervous. How's this going to affect our markets? Should we be selling out of the US? A lot of these things I heard back last spring. And for those that didn't panic and stayed the course, continue to own good quality investments, both in the US and outside the US, as we know, last year, you made out quite well. Our next chart clearly shows this. The US stock market powered through a roller coaster year in 2025. There you have the Trump tariffs, the tariff pause, and then the markets just took off from there through the bombing of Iran, through the crypto situation or dive that we had towards the end of last year. The United States, the S&P 500, ended the year at pretty much all-time records, just under 7,000 points. However, it was a bumpy ride. So the market did climb that wall of worry last year, just like I guess the market's doing when I came on the air at noon today. The market seems to be climbing yesterday's worries. And we have a chart of just how bad the markets fared yesterday. there you have it. The S&P 500, Dow, and NASDAQ down anywhere from 2.39% to just under 1.8%. So pretty negative day. And here we have the next day, President makes a speech in Davos, Switzerland, to the World Economic Forum, and markets are rebounding from yesterday. And it's interesting, in his speech, he mentioned how the United States is doing so great. GDP is up, inflation is down. He mentioned that they're doing the best. A lot of it has to do with some of the policies he's put in place, some of the tax reductions, eliminating red tape, and obviously he talked about the tariffs, making America great again. Well, interesting enough, our next chart shows that, well, making America great again, he did. U.S. markets were higher, but as you can see here, markets around the world fared a lot better than the S&P 500. There you have the German DAX, Japanese Nikkei, and even Brazil. And we talked about this on our last show, how the world markets actually fared better than the U.S. market. So making America great again ended up being making everybody great again, which I guess the president could brag about and could be proud about doing. Our next chart, we go to the 30-year Treasury bond rate in the United States. The president and his administration wants to see interest rates coming down. When you have volatility like we saw yesterday, uncertainty like we saw yesterday, there is this fear that other countries will no longer or stop buying U.S. debt or even sell U.S. debt. There was some talk of that yesterday, and that caused the 30-year Treasury bond rate to spike to 4.92%. More importantly, it caused the 10-year, which is our next chart, to spike to 4.29%. We have that chart there as well. And as we know, the 10-year is what mortgage rates are based on. So if we get a spike in the 10-year, there's a good chance that mortgage rates, fixed mortgage rates, will move higher as well. So geopolitics on the minds of many investors today. I'm hopeful that today's speech by the president, although being a little bit confrontational as he was, if you heard his speech this morning, I did. He called out many world leaders, many different people, but he also said and gave some assurances that he would not take over Greenland by force. He's hoping to negotiate. So that was a positive, and I think on that sentence alone, the markets turned to the positive, but definitely something we need to be focused on. Our next, I guess, topic is for the top three things that individual investors need to focus on as earnings season. And so earnings season started off with the big banks in the U.S. Best big bank earnings was Bank of America. We have our first chart, which is on Bank of America. And I thought they had the best chart. Actually, our first chart is on the U.S. financials as a whole. We can come back to Bank of America. Our U.S. financials ETF clearly shows that that sector has done extremely well and continues to power ahead. But as you can see, Bank of America sold off on its earnings report. And like other major banks, it just seems like when big banks report earnings out of the U.S., more often than not, it's a sell the news phenomenon. They buy the rumor. So the Bank of America actually hit as high as $57 a share, over $57, and quickly lost 10% after earnings were released. Another chart we have here, which is JP Morgan. JP Morgan is our bank chart, also shows that this stock lost as much as 10% when they came out with earnings. Also, I thought very strong earnings. I thought that, there was a cautious tone to Jamie Dimon, the CEO of JP Morgan, but he always seems to carry a cautious tone. He's concerned about, obviously, things such as inflation and world events, more so. And I think that may have led to his stock coming under pressure. As we now transition from bank and financials, we had some of the super regionals, PNC, US Bancorp. I thought earnings were okay over the last few days. We're now moving into tech and the tech sector. We have a chart on the first company, the first big cap tech name to report earnings, which is Netflix. And I thought Netflix earnings were just okay. They beat the expectation by just slightly. I thought their guidance was weak. Their subscriber growth was good, but their guidance going forward, margins I thought a little bit disappointing, and I think the market felt that as well. There were some reasons for that: increased costs for creating some of the content that they do, that they're so good at. But those costs are definitely rising, and I thought that was a bit of a negative. And so their guidance going forward overall was a bit disappointing. But you can clearly see that this stock has had a pretty large pullback from well over $130 a share down to under $90 a share. And last night, after they reported earnings, the market did not really like them either, and the stock pulled back as well. But as we move into the rest of the tech space, we have a chart on the Mag 7 stocks and how they're performing. And actually, I would say that some of these big cap tech stock names are actually in a good spot because they're heading into their earnings reports over the next couple of weeks on a bit of a down note. Apple down 10% this month, Meta down, Microsoft, Nvidia, Tesla, the Mag 7 in general down 4.5%. Obviously, their one-year numbers fared a little bit better, although Alphabet and Nvidia carried the group. All the others were sort of flat, maybe even slightly negative on Tesla. You look at a 5-year number for the group, obviously much higher. Again, Alphabet and Nvidia really carrying the group to 132.5% gains for the last 5 years. So I think you want to look at earnings. Tech earnings are going to be so important to how the market fares. And we're going to get some tech earnings from the likes of Microsoft and Meta next week, followed by Apple, and then eventually Amazon and the rest of the big cap tech names. So keep an eye on earnings season, tech earnings, because they're going to be very important. Our last topic that individual investors need to focus on before they make their investment decisions, to me, is this idea of, are we just getting too tired of a tech? Are we talking too much? I don't really hear much about the Mag 7 as a group anymore. A lot of the good results, the price of stocks going higher, not only is it in the Mag 7, but it's a lot of other tech names as well. But perhaps individuals are starting to grow a little bit tired of just the tech sector making all the gains. We have a chart here that shows that gains are actually happening in other sectors, broader gains happening right now. Recent U.S. stock performance shows broadening of market leadership. The actual number one sector over the last little while has been healthcare. That's the green line, followed by the small cap index, industrial sector. Then you have the overall S&P 500. And as you can see, below the flat line is the tech sector. And that is, in the last couple of months, that's what we're seeing. Tech underperforming other sectors. And have a few charts of some tech names that will clearly illustrate this. Our first chart on an individual name is the biggest tech name that exists today, which is Nvidia. If you look at the Nvidia stock, there you have it. And you can see it has not performed well ever since that spike, I guess, in November. It has come down quite a bit. All the way, I think its high was somewhere around 210, 212. Now it's trading under $180 a share. Our next stock, another Mag 7 name, is Meta. We pull up a chart of Meta. You could clearly see that Meta, too, has had a bit of a difficult time. Their high was somewhere around $800 a share, and now they're trading almost $200 below their all-time highs. Next chart, Microsoft. Microsoft once a $555 stock at its high, now trading about $100 less. So you could clearly see these Mag 7 names, for those that were saying they were overvalued, that they were, their PE multiples were just out of, astronomical. Yes, perhaps a couple of them have high multiples, but you could clearly see that a number of these Mag 7 stocks are actually trading quite cheaply. Thought before we move to our next segment that we would focus on some non-Mag 7 tech names, and I have one here, IBM. IBM had a tremendous run over the last bunch of years, but you can see clearly since November, IBM has been trading in what we call a pretty defined trading range. Our last stock that we have is one that shot up after earnings a couple of quarters ago, and really since then has come down, and that is Oracle. Oracle, one of the biggest tech names in the world today. You can see how badly, unfortunately, the stock has done. And our last chart for this segment, profit potential. And again, we can show, yes, even though technology has the largest profits, still by quite a bit, a lot of the other sectors are following behind it. Materials, industrials, consumer services, financials, utilities, these are all doing quite well as well. So are people starting to get tired of tech? Perhaps. Are they moving into other sectors? Perhaps. As we always say, a cause for diversification. Everyone should be diversified. Stay diversified, because even with technology and the successes we've seen and the successes we are still going to have, you still need to be diversified into other areas, because as we're seeing over the last couple of months, when tech stumbles, other sectors pick up the slack. And so staying diversified always makes sense. And as I said, you want to take a look at these three things: geopolitical events, earnings, and the tech sector running a bit out of steam a little bit. I think those are the three things you want to look at before you make your investment decisions. So with that, I want to introduce our first interview for our show. This is an interview I had with Premier Doug Ford. I was able to catch up with the Premier earlier, I should say, late last week. And he had a lot to say about Ontario. And we're going to bring this interview to you right now. I'd like to welcome Ontario Premier Doug Ford to our show. Premier Ford has led the province for almost 8 years, championing himself as a builder. He's building a stronger economy and is attracting new investment to the province. Prior to being in provincial politics, Premier Ford was a Toronto City Councillor. He's also a successful businessman and owner of Deco Labels. Premier Ford, welcome back to the program.
Well, thanks so much for having me on, Alan.
Excellent. Thank you again for carving out some time for us this morning. I know you're a busy guy, so we'll get right into it. I guess probably our first question that I think most listeners would want to know is, I guess heading into 2026, how do you view the state of the Ontario economy right now? Obviously, we've had some ups and downs, we've had some volatility, but what would you say? How would you say our economy is faring right now?
Well, I tell everyone coming into 2026, Alan, I'm feeling very positive. And I'm just comparing where we were at last year. Last year, President Trump was just sworn in. He was threatening our country, threatening our auto jobs, our life science, our manufacturing, our steel, aluminum sectors. And he was out to fully destroy the provincial economy, Ontario's and Canada's, along with every other country. We had a federal government that basically fell. We didn't have a federal government at the time. The premiers jumped in there and kind of led the way. Compared to this year, we have a stable federal government. We know President Trump's rules, and his rules are there are no rules. So what he did do, if there's anything he did positive, he's united the country, and that's so important. And at least we know where we're going. That we have to focus on what we do and what we can do by a wide range of different things, by cutting red tape, regulations, making sure that we create the environment and conditions for companies to come here and start investing in our own infrastructure. We're investing over $220 billion into roads and highways, transit, schools, hospitals, daycare, and really connecting communities and connecting opportunities. Last year, Alan, Ontario welcomed over $28 billion of investments, creating 57,000 new jobs. And we've been hitting the ground running because we've created that environment. And these are the numbers that we know about. I say these are the numbers we know about, the 28 billion and 57,000 new jobs, because there's so many small companies out there that might buy a piece of equipment for a couple $1 million, hiring 4 or 5 people, and there's that's where the majority of the jobs always come from, small businesses. But again, we have to focus on what we can do to make ourselves more competitive. And I announced that we're bringing the Northlander back. That's going to be incredible for the people of the North that the Liberals basically shut down. They called when the Liberals were in power, Alan, they called it a no man's land up north. So we're connecting the north. We're also unlocking the Ring of Fire, which will create, and these are very conservative numbers. We're going to add $22 billion to our economy, create 70,000 jobs. So right now, we're focused on what we can do and attract more companies. And we have a long list of companies around the world that want to come and invest in pro-business government that runs Ontario. And it's the people. We have the smartest, brightest people anywhere in the world.
Yeah, I guess talking to a lot of business owners as I do, I know you and I speak from time to time. I guess, talking to them, they're going to focus on, or they've been focusing on a bit of a pushback, right? They're saying, 7.9% unemployment rate in Ontario. We ended the year off. We were, up and down all year. Obviously, the trade negotiations, which you just mentioned, going back and forth. And as we know, province of Ontario is the most affected province in Canada, but, with respect to trade and the ups and downs of the negotiation. So, I guess they're saying, how can the premier be as optimistic as he is when we're seeing some of the numbers or the data, the unemployment rate and the trade talks? How can you be as optimistic as you are when I guess a lot of businesses are sort of focusing on those two things?
Well, first of all, there's uncertainty, with Trump attacking us and going after these companies to go down south. Let's look at the last 4 months. Why am I positive? Last 4 months, Ontario created the climate and the conditions for 82,000 jobs. I can never figure out, and I'll have to sit down, I guess, with Stats Canada one day to figure out how we created 12,000 jobs last month, 82,000 in the last 4 months, and unemployment jumped up 0.6%. I'm sure they have their methodology, but all I know is if we continue creating jobs at the rate we're going, the bumps won't be as large. But is there going to be bumps? 100% there's going to be bumps. Is there uncertainty with Trump? 100%. But we have to focus on what we're doing and building our investments. And we've seen 1 million people employed since we've been in office, and that's $113 billion we've seen invested here. So, we're going in the right direction. We're the only government that I can ever remember, Alan. We've never raised a tax. We reduced the cost of doing business here, not just on businesses, but with people as well. So we're going to continue focusing on training workers and training jobs of the future. And so far, we've trained over 750,000 workers. And just in the last year, these people found 100,000 jobs. They found employment. So we're moving in the right direction, 100%.
Yeah, it sounds like it. And along the lines, you mentioned taxes. I guess that's something you and I have talked about over the last few years. And recently in a press conference, you mentioned trying to get more money in the hands of Ontarians, of Canadians, with respect to perhaps a tax cut or continuing to lower interest rates. Two things that, well, we haven't really seen. Well, we saw some interest rates going down last year, but they didn't cut interest rates again in December. The US did cut rates. Tax cuts, well, we have not really seen any meaningful tax cuts in quite some time. So I guess my question to you, and again, a question that I talk to a lot of business folks about, is do we need to see meaningful tax cuts, continued cut in interest rates for people to get excited here in our province in Canada? Do we need to see that, or can we just go about and could continue to create growth without seeing tax cuts and cutting interest rates?
No, it's critical that we cut taxes, and it's very simple. We've cut the burden off companies by $12 billion each and every single year, and along with people as well. A couple areas, and I wish I had a big sign at every gas station that we've cut over 11.8%, I mean 11.7 cents or 10.7 cents, I should say, off the gas tax. So they'd be paying that additional 10.7 cents if we didn't do it. And that's saving families anywhere from, depending on how much gas they use, but $100 to $150 a year. We remove the tolls on the 407, 412, 418, saving people $7,400. and something called One Fare. You can hop on the GO train in Barrie and come into the city, hop on the TTC. That's saving people about $1,600 a year. We cut the Ontario provincial carbon tax, and then the feds followed. So we're also looking for different ways to save money. We gave back a rebate of $200 per person rather than every government I've ever known. They believe it's their money. We don't. We have a simple philosophy, Alan. Put money back into companies' pockets. They're going to invest it into their people, into technology, into their infrastructure, buying new equipment, creating more jobs. Put money back into people's pockets, and they're going to do things that they might otherwise not be able to do. As simple as going out for a dinner or buying your kids, some supplies or clothes or putting a renovation on your house or saving to buy a home one day. So we need not only the feds to cut taxes, personal and corporate, but we need the Bank of Canada to lower their interest rates. And we have to remove the provincial portion, which we did for HST on newly built homes, and the feds followed. But I don't think that's enough for first-time home buyers. We need to cut the HST for any newly built homes for everyone. If you want to buy a new home and you've already bought one, God bless you. That's 13% we can save, let's say, on $1 million home. If you're lucky to find a single detached home for $1 million, that's $130,000 going back into people's pockets. So that's what we believe in. We're the only government ever never to raise taxes, reduce taxes, and we're going to continue reducing taxes.
And I couldn't agree with you more. And I think that there's a big push talking to a lot of tax experts. It's a big push, or at least we tried before the budget came out to try and influence Ottawa to consider cutting taxes. And I guess unfortunately they did not. And perhaps that's something to come down the road. I know you mentioned the $28 billion or more than 28 billion of growth last year, which is fantastic, especially at a time when there was so much volatility. So I just wanted to circle back to that and ask you, what do you think was the key to your success? How can we, or how did we attract so much new business, new investment into our province?
Well, one part is what I was just saying, reducing the burden off companies by $12 billion. But the other area is cutting red tape and regulations by $1.2 billion. And that saves 1.8 million working hours, meaning you can reallocate those people into more productive areas rather than filling out government paperwork, and making sure we keep taxes low and creating that environment. So if they have a problem and they're coming here, they have one line to call, and they can call up and you get customer service excellence, the white glove treatment. And when companies come here, they have my number, they have the minister's number, and we take care of any problems at all. We have affordable energy. We'll get into what we're doing on the energy side in a minute, but we're building out energy, the likes of which I guess the world has never seen before, especially North America, on what we're focusing on, the small modular reactors. And the whole world wants our energy. They want our small modular reactors, and we're creating opportunities for people out there as well. And so the modular reactors, we're leading the G7, the entire world, and that's going to create another 18,000 new jobs. And then we're refurbishing the Pickering nuclear generation station, and that will create another 30,000 jobs and generate power for 2 million. And then we went down to New York and signed a deal with the state of New York to share our energy expertise with them, including provinces like Nova Scotia, and we're working with New Brunswick and Saskatchewan and Alberta, and then internationally, Poland and Bulgaria. These are some of the areas that we're sharing our energy. I'll put this into perspective. When we went and signed that deal before Christmas with New York State, they were doing cartwheels because they were producing 1,000 megawatts. To put it into perspective, we're producing overall with everything 16,000 new megawatts, equaled 16 million homes basically. I thought the governor was going to fall off her chair when I said 16,000, and she thought she accomplished, which she probably did, 1,000 megawatts. So there's a big difference in I'd love to sell our electricity, not just around the world, but to our closest friends and allies, the US, because they need it. The data centers that are popping up that just take so much energy, they don't have the energy. They don't have the energy for their manufacturing, for their aerospace, for their military. And who has it? We have it, and we're leading the world. We're going to continue. We're building large scale nuclear facilities over in Wesleyville and Bruce C. They're adding capacity as well. So we're a nuclear powerhouse around the world. And then on the medical side, the isotopes that are coming from these nuclear facilities are going to save lives, and we're going to be leading the world in that area as well. So we're going in the right direction. I always say there's always bumps and walls we got to knock down, and not just us. It's the whole world is facing it, and all of Canada. But we're leading the world. I always say we aren't just in an economic powerhouse in Canada, in North America, but around the world, and people know it. And our number one selling feature are people. We're graduating 85,000 STEM graduates every year. We've signed MOUs with 10 other provinces and 3 territories, eliminating the trade barriers, which is equals about $220 billion or anywhere from 4 to 6% on our GDP.
Yeah, it's what an extensive list, and it's interesting because talking to people, they just don't know all the things that that you're doing, your administration that you were doing here in the province, and you hear some headlines or read some headlines, but really they just the list is so great, and I guess that leads me to my last question. You've talked about building the most competitive, resilient, and self-reliant economy in the G7. I guess the final question I would ask you is with that long list of things that we're doing or working on, what would you say would be the top priority right now for you and your administration in 2026? Is it more energy focused? Is it focusing on automobiles, steel? And what would you say most of your attention, or at least a lot of your attention, is going towards at this point in time?
Well, before I answer that, what we can do, I always look at continuous improvement. I'm big into Lean Six Sigma, and we need to continue what you just said. We have to do a better job in getting our message out there to tell people. They say you have to say something 100 times before it sinks into people. So we're going to continue doing more ads and informing the people of Ontario. But our key focus, number one, is diversifying. Diversifying, we rely on the US. Now we have to reach out to around the world and attract new customers, if we can call them customers, because they are. But two key areas, or even three. Number one, it has to be the energy. Everyone needs it. We're the leaders. We're going to produce it. And so that's key, and that's going to create massive, I think about 133,000 good paying jobs in total, and critical minerals. The world needs it, and we have it. We have the largest trade show in the world, PDAC, that's coming to town over the next month. The world's going to be here. We need to focus on those two, but also the manufacturing sector, making sure that we cut the red tape and regulations, reduce the burden of taxation off of them. And right before, another big area is believe it or not, is tourism, hospitality. Before we left in right before Christmas, we had four announcements. One is Niagara announcement, and that's going to create tens of thousands of jobs, making sure the destination Niagara just flows, and we're going to be getting the big call them the big guys per se, the MGMs, the Winds of the world, coming to Niagara to create tens of thousands of jobs and opportunities there. The next day, we were with the defense bank, which is going to be massive. If we can land that, 3,500 jobs over 40 countries. They're going to need a 500,000 square foot building. The defense contractors, well over 500 here in Ontario, but around the world, will be coming to Toronto if we can win this worldwide. And then the following day, we went up to see the Prime Minister, making sure that we don't duplicate, because under Trudeau, they were duplicating everything, slowing everything down. And we need one process and one window per se. and make sure that when companies come here, they're dealing with one level of government, not two. So we're speeding that up. And then the last one I mentioned about New York State, we're working with all states. Every day I'm talking to a senator or governor and circumventing Donald Trump, not going through Trump. I'm meeting with a whole contingent of folks in Michigan coming within an hour, both Republican and Democrats. But I can tell you, no matter if it's Republican or Democrats, I'm going to focus on Republicans. They do not agree with what President Trump is doing right now. They're totally against it. I always say a tariff on Canada is a tax on Americans, and that's what's happening.
Yeah, well, I guess we'll have to see what the Supreme Court rules coming up, I guess, any time now. Just refreshing, I think, for business folks that are listening to our show and watching our show to hear the focus on business and the growth and the job creation. Obviously, there, as you mentioned, there are bumps in the road, but with the focus on bringing new investment, new business to this province, I think that is the main goal, I think. And it's great to hear that we have so many irons in the fire and things are moving ahead. So with that, I want to thank Premier Doug Ford for taking some time out of your busy day to spend it with us. Thank you, as always, to tell us what's going on in the great province of Ontario. I'm sure a lot of business owners will definitely learn something new and not sure as to all the different things that are going on. So I want to thank you for coming on our show and continued success and continue to do the great job and bringing new business and investment to our province.
Well, thank you so much, Alan. We're going to keep moving the ball down the field a yard at a time, and as business owners know, never ever give up. I always believe the glass is half full, and we're an economic powerhouse. We went through bumps in the road, no matter if it was the pandemic or other areas, and we're going to come out stronger than ever before. I just want to thank all the businesses. You ever have a problem, call me on my cell phone. I'll get right back to you, and God bless the people of Ontario.
Thank you.
Thank you, Alan.
A great interview with the Premier. Just refreshing to hear all the different things that we're doing in the province. And for those that have been feeling a little down, a little negative, obviously we're hearing all the negative headlines. It's great regarding trade and many other things. It's great to hear that the province is still moving forward. And speaking of trade, we have our next interview, David Patterson, Ontario's representative in Washington, D.C. He's going to talk to us a bit about trade or a lot about trade. And here's my interview with him now. I'd like to welcome David Patterson, Ontario's representative in Washington, D.C. David was appointed to the Ontario position in November 2023 and brings 30 years of business experience serving as chair of the board of directors of the Canadian Chamber of Commerce, as well as 4 other boards. Previously, David was the lead corporate environmental relations in GM Canada. He also served as senior VP, government relations and public policy at BlackBerry, formerly Research in Motion, as we all know. And before that was SVP, public affairs at Manulife Financial. Welcome back to the show, David.
Thanks, Alan.
So great to have you. And obviously at a time when everybody's starting to talk about trade, although I guess we probably never stopped talking about trade, but it's coming front and center with obviously, I guess depending on where you live, USMCA or CUSMA, however you want to call it, coming up for discussion already I'm sure in discussion. And that kind of takes me to my first general question for you, obviously being our representative in Washington and really close to what's going on and the trade talks. I guess I would start off by asking, what is the current state with respect to trade talks between Ontario and the United States? Sometimes we hear a lot, sometimes we don't hear much. And so I guess we'd start off just generally, what's the current state?
Well, I think we're in a transition to really a 6-month sprint for Canada and the United States to make decisions with respect to the USMCA relationship. Mexico will be part of that discussion as well. As we know, last year the federal government made efforts to try and get some changes to some of the sectoral tariffs that had been put on Canada, particularly with regard to our sectors like automotive and steel and aluminum. That didn't happen, but I think all of those talks will now combine together with a bit more of a organized process around what things can we do to address issues that are outstanding with regard to the USMCA, and what options does the United States want to take going forward in that regard. So those things are all coming together. And but there's a bit of a clock on us right now because July 1st is sort of the deadline to which the parties need to sit down and decide, do we have a way to go forward, or do we want to get in perpetual annual renegotiation? And that's a sounds like a whole bunch of uncertainty to me and to business. And so I think we really want to make sure that that we try and resolve issues and get there by Canada Day.
Yeah, and I guess we don't want these issues to keep coming up every year, as you said. Is this going to be something every year, or we're going to have more of a longer lasting agreement? I guess from here in obviously in Ontario, in Toronto, we hear a lot of different things. We hear a lot of comments by the president, President Trump, recently saying that he hasn't even thought about USMCA as yet. And obviously, president says a lot of things, and some might be, on the mark and some maybe not so on the mark. But how important do you think renegotiating Kuzma is to the Trump administration when he is making comments like that? Do you think it is important to them, and are they taking it seriously even at this stage?
Well, it is very important to them. I think that's true. And I think we've all learned that sometimes we have to sort of put comments through the negotiation translation machine and make sure that we are prepared and we've done our homework and deal with the issues that are being raised. But if we can separate signal from noise a little bit on this, it's really important to understand this is the most important trade relationship the United States has with Canada and Mexico, and it really dwarfs all the others that are out there. And I think that's part of the reason why you saw uh, some changes in resolution with other countries in some of the tariff discussions that took place last year, like Japan and with South Korea and the EU. Many of them still not completed and not fully certain, but our relationship's much bigger, and we are their biggest customer in Canada. That's really important to remember. We're a wealthy country. We buy a lot of goods from the United States, and we have this deeply integrated supply chain. And so we're really codependent in many, many ways. The president may not want to talk about that first and foremost, but there's many, many aspects of American self-interest that rely on Canada, and also the things that are important for America's growth and future of their economy is linked to that as well. So we can be confident if we think about that and understand it and really start from that perspective. And I think that gives us the best pathway forward to discussion.
Yeah, and you hear also, Trade Representative Jameson Greer recently. I saw him in an interview saying, that the U.S. can go about things on their own, and you continue to hear that kind of rhetoric, and we all know that that's probably not the case. But do you think, do you think that the markets are undervaluing right now Ontario's strategic importance to the U.S.? Like, are they, minimizing how important we actually are? Is this a trade tactic or a negotiation tactic? Or do they really think that we're not as important?
I'm not sure if the markets are undervaluing Ontario because we see an awful lot of interesting issue or interest into Ontario as more of a bit of a predictable safe haven for certain types of investment. And keep in mind that what we're talking about when we're talking about tariffs and trade and the USMCA is largely our trade in merchandise goods, which is the traditional parts of our economy. But, our finance world and our digital world in many cases, and many of the other things that we do within the Canadian economy amongst ourselves don't really fall into that bucket as much. And but the traditional trade in goods is really intertwined. We build things together with Mexico and with Canada and the United States. And so I think, in valuating it from the market point of view, it depends on where you're looking. I mean, if we step right back and say, what are the opportunities as investors looking into the marketplace? I think those are probably people trying to understand where is AI going? Where is you take a look at the value of the S&P right now, and it's dominated, of course, by semiconductor chips and the big technology companies out of the United States. And so, we are a pretty important part of that, whether it comes from the fact that if we're going to have artificial intelligence, boy, do we need a lot more electricity. Well, we know a lot about electricity. We have, a leadership in nuclear power, which is really very significant and important if we're going to be successful in that area. And similarly, we hear an awful lot about the importance of critical minerals. We never really did hear a lot about that for years and years, but we in Canada, of course, through the Toronto Stock Exchange and just our history, we are the center of the world when it comes to raising money for mining and certainly expertise. Just Sudbury alone and the production of nickel, high grade nickel. You can't run the American military or the auto sector without high grade nickel. And there is no nickel in the United States. There's no refining of nickel in the United States. And you could say the same thing about aluminum out of Quebec. So there's a lot of those types of things that you really just have to look at on an integrated basis and sort of ask the question, what is the value proposition? What is the thesis for North America going forward? And where does that fit vis-a-vis China? Where does it fit with Europe? And if I'm the United States, I'm going to want my closest allies at my side to be able to be successful in that world. So that's what gives me confidence as we look forward to some of these things getting sorted out. But it's not to underestimate how difficult it's going to be. It will be challenging, and yeah, there might be a little bit of politics along the way, Alan.
I can imagine. I can imagine. Are large U.S. equity firms and corporations, are they still committing capital to Ontario projects at this time, or has that kind of slowed down or stopped?
Yes, and not just not just even North American funds or American funds, but out of Europe and around the world. And we've seen the Prime Minister traveling to the Middle East, and he's in China today. And part of that is his core expertise of being able to raise money around the world for things. We have a clear focus on trying to do big things again in Canada. For us in Ontario, that would include the Ring of Fire, something that has just taken far too long to move ahead with, and yet. We're probably sitting on some of the world's largest titanium and other types of things, which are absolutely critical for the future. And continue to invest in our infrastructure in electricity and in the West, getting our energy resources to Tidewater. So these are big investment opportunities as long as there is a return. And a lot of those we have large investors taking a look at right now. But one of the things you will want is to remove some of the uncertainty that comes from uncompleted trade discussions. And so we really do need to get through as quickly as we can this kind of set of discussions. I think it's more than just making an objective of completely removing tariffs. We would like to do that. I think we're now in a changed world where tariffs are going to be part of that world going forward. And we're probably looking more at issues of relative competitive advantage for Canada. And as the Prime Minister likes to mention, we are in the most favored position in the world in terms of the lowest tariff rates with the United States right now. But we're used to having zero, and we're used to having open market access. And so it's a very uncomfortable shift, and it is extremely upsetting if you're in some of the sectors that are being hit, like steel and like automotive and the like. So we have some really hard work to do, and that's why Premier Ford has been really standing up. Sometimes I wish business was standing up a little bit more and maybe didn't have to do it quite as hard as he has. But we've got to stand up for our future.
Yeah, no, for sure. And I think you may have already answered a bit of this question, but it's a question I get probably most often from businesses in and around Toronto, small businesses north of Toronto, et cetera. And what they're saying is obviously, you mentioned tariffs many times already, but with the tariffs that the United States has put on goods and obviously trying to favor domestic production, that's what President Trump wants, right? Things produced in the US. How can Ontario ensure that it remains competitive within North America? Why is a business going to come do invest in Canada when they could invest in the United States? Or is it going to be because some of the stuff, as you've mentioned, that we produce that they don't? What's our competitive advantage? Why would someone
Hmm.
want to come to our province of Ontario? And we know, talking to the premier recently, $28 billion of new investment last year, a great number, and hopefully bigger this year. But why would someone choose? What's our competitive advantage to win business?
Yeah, I think it's a bit of a mistake to think that the only competitive advantage is unfettered access to the United States market. That is critical. And from some of the industries I've worked in, the automotive industry, for instance, the only reason that you have auto manufacturing in Canada is because we can rationalize production for a full North American market. Producing in Canada in a factory, uh, in the auto sector for just the Canadian market alone, which would be less than 2 million out of 17 million vehicles bought every year, it doesn't pencil. But there are lots of other areas of development. I've talked about a few of them in terms of energy and mineral development. But I would go further in terms of where a lot of investors are focused right now, and that is, what is our digital future? Where is AI going to be deployable in a way to really supercharge productivity of different businesses? We have some incredible capabilities in Ontario. Literally, we're the creators of things. Everything from I had the honor of working for Mike Lazaridis and Jim Balsley. We created the smartphone in Ontario. We are the pioneers of artificial intelligence in Ontario, and the legacy of people that we have, and frankly, our ability to draw the best and brightest from around the world more so than the United States, are all things that really are attractive, let alone trying to make sure that you have a dependable market for these kinds of things. The United States looks a little less dependable in some of those areas, and we see people looking at alternatives. And I haven't even mentioned, of course, the big shifts in terms of spending on defense, moving from Canada's perpetual underspending on defense to 5% of GDP is an enormous shift. And that speaks to opportunities in all the supply chains that go with that, whether it's steel for ships and technology for other things. And generally, as those expenditures take place, some infrastructure, some others, that really taps into some of these underlying capabilities. I always found it amazing in the auto industry. You think about it as being cars, but no, there's like 30,000 pieces that have to come together, and Canada can be, whether it's a sensor or capability for something that is uniquely important. And we have a setup in my old company in Markham, Ontario, with 1,200 people that are PhD level, best in the world at creating connectivity of vehicles to mobile networks and self-driving capabilities. That's the future, and we have it. We have that capability here in Canada. So we should be building that and really building on a portfolio of intellectual property out of Canada. I think if I was looking for one thing to invest in, it would be IP in the future.
Yeah, and I guess that takes me to my last question. We know all the risks, the geopolitical risks to Ontario, and maybe you've already said the answer to this question, but with obviously everything that's going on, there's also big opportunity, and I think you've touched on this throughout our interview here. But if you were the boss, if you could decide where to spend all the money or most of it or a big chunk of it, what would you say the biggest opportunity, or where would that biggest opportunity lie? Where should we be? What should we be capitalizing on here in Ontario? If we had to go forward, take all dust off your crystal ball, what would you say would be the best opportunity now going forward?
Yeah, I mean, I think the answer is kind of staring us obvious in the face. You just look at the valuations on the stock market right now. It's intangible goods. So while and I spend a good portion of my time dealing with trade issues over merchandise trade. It's that digital economy of the future, founded in intellectual property and knowledge, goods that travel around the world. When I worked at BlackBerry, I was in charge of 175 markets for public policy, and you go into the backwaters of small Asian countries and see a logo for BlackBerry in the store. That's what we should do in Canada. We should be able to take something that moves quickly around the world and just think of what we as a wealthy nation, what do we consume every day? Well, most of it's on our phone. Those types of things need to be developed. They need to be put together. And, I think that's where a lot of our future is, but we cannot turn our back on the kinds of things that, frankly, Donald Trump wants to preserve out of, the rust belts of America. Well, we want to preserve our auto sector too. They need each other. There's no question. America would lose about 140,000 jobs if they couldn't get access into the Canadian market for the vehicles that they make down there. So we want to preserve all of that, but we want to look at the future, investing in the future. And I think it's kind of an exciting time. Maybe that's the greatest legacy from Donald Trump, is to give us the kick in the what, so that we can make sure that we get thinking about fixing some of the perennial problems that have blocked us from taking care of our future going forward. That's what excites me and the premier I know, and so that to me is the good side of the ledger.
Yeah, the good side. And I've said it lots of times, if we come out better and stronger over the long term because of what's happening, I think it is a bit of a kick in the rear end there to get us all moving in perhaps a different direction. David Patterson, Ontario's representative in Washington, D.C. I want to thank you for taking some time out of your busy day. I know it's busy and probably going to get even busier over the coming weeks and months. Thank you so much for talking to us and telling us what's going on in Washington, the state of affairs with regards to trade. Much appreciated, and I'm sure we'll talk again down the road. And good luck with the negotiations.
Thanks, Alan. Good. We'll talk soon.
All the best. Take care.
Bye now.
Two great interviews. That was David Patterson, Ontario's representative in Washington, D.C., talking a lot about trade and where we stand. And I think after listening to that interview, after me doing the interview with David, definitely a lot more positive on USMCA, CUSMA, where that's headed. And I think we're going to get a deal. It's just a matter of what will the details be. And I think that having good quality people like David negotiating for us makes a lot of sense. Now we come to the part of the show where I take at least one question from our audience. And I thought it'd be fitting to take this question today. Gold soared in 2025. Should I consider adding gold to my portfolio? I guess the short answer is sure, you could consider adding gold to your portfolio. Now, as most of you know, I'm not much of a gold bug. I have a hard time understanding gold and why it keeps going higher. I guess, I understand why, obviously, US dollar, it's a hedge against US dollar, a hedge against debt levels from countries like the United States, which have taken on a lot of debt by all Western countries in general. And, it's a hedge against fiat currency. It's an alternative currency to the US dollar. So I understand all that. The question becomes going forward, if the US can do what the president wants to do, bring down debt levels and increase growth and continue to have the US dollar being the dominant currency around the world, I think at some point you may see a bit of a pullback with respect to gold. We also know silver has gone up even more than gold over the last year or two, and will silver see a bit of a pullback as well? Silver has a little bit more or a lot more industrial use than gold does. So maybe silver is a bit more understandable to see the price go up versus gold. But sure, you can consider having gold as part of a portfolio, but you may want to wait for a pullback for that to happen. So with that, I want to thank everybody that tuned into our show today. Hopefully you saw both our interviews, one with Premier Doug Ford, one with David Patterson, Ontario representative in Washington, D.C. Two great interviews. It's been a pro-Ontario show. Hopefully all of you enjoyed it and can take away something from our interviews. I hope that all of you will tune in again 2 weeks from today, Wednesday, February 4th, across all social media platforms to catch our next version of the Allan Small Financial Show. And until then, happy investing.